Hey guys, it's Dylan with Mathias Brothers Real Estate at Vanguard Properties, and I'm really excited today. I had a friend who came to me a year ago, before I was even in the real estate industry. He knew I had a finance background, and he asked me, hey, how can I save for my future house? And so we sat down and ran a couple of the numbers, and he actually just came back to me about 3 days ago and let me know he was exactly on track to meet that end goal of the down payment for his house. So it was really cool to hear those success stories, and I just want to kind of share them with you guys on what we did and what he was able to do. So for all of you that know me, you guys know that I'm a very goal-oriented person. So I like to start with the end goal, whether it be your next vacation, whether it be buying your next car, or in this case, buying a house, and work backwards to say, hey, what do I need to change today, or what do I need to do today? And what are the steps I need to do to get to that end goal? So that's kind of what we did. And so he was coming out of college, landed a really good job, and we figured after taxes, he could be making around $5,000 a month. And at that time, his monthly expenses were about $3,500. And I looked at them and I gave him some suggestions on what he could do to reduce those expenses. And it was really cool. He went back, called his cable company, because they're always running deals, got his cable bill reduced by a tremendous amount. He had like 4 or 5 subscriptions he wasn't using at all. We canceled those, and then he started eating in more. He was eating out a lot because he was busy and he got complacent. And so he started eating in more, got more disciplined about that, and he was able to save $500 a month. And so we got his expenses down to $3,000. And he currently had $20,000 in the bank. And I would suggest people having at least 3 months of their monthly expenses in an emergency fund. So we took 9,000 of that and said, hey, let's forget about that. Let's put in an emergency fund. And that's for if you get laid off, any catastrophic event that happens in your life, you have something to fall back on. It's a cushion. So we said you currently had $11,000 saved up for your future house. And he told me he wanted a house around $500,000, and he wanted to put 20% down, which was a good amount because he wanted to keep his mortgage about what he was paying for rent. So we factored that all in, and we said, okay, your down payment is going to be about $100,000. You currently had $11,000, and then we divided that by $24,000, which is what he could save every single year if he stuck to his budget of the $5,000 and $3,000. And we figured in 4 years he could have the down payment to buy his house. And he was super excited about that. And when I saw him a couple days ago, he was even more excited because he really saw how a little bit of discipline, how far it could go to reach his end goal. And so I actually told him at the time, and I told him again, that he needs to go talk to a mortgage lender, because I can sit down and run rough numbers, but the mortgage lender is going to let them know exactly what to do to get to that end goal so they can qualify for a loan. And that's going to be increasing your credit score, the longevity at your job. They know exactly what they look for to qualify for people. So it's really important, even if you think you're not going to buy a house for 5 years out in the future, to go talk to a mortgage lender today to see what you could do today to set yourself up for success in the future. So that's it. And if you guys have any questions, always feel free to reach out. And I'm really looking forward to continuing working with everyone. Until next time.